If you were to ask an entrepreneur what their cost of capital is, you'd be surprised to see the number of them who may not really know the actual cost of capital of money invested in their business. Most of them would tend to look at the cost of capital as the rate of interest that they have to pay to the banker on the borrowed funds invested. There is no cost attributable to the shareholders' funds which have been put into the business and invested for long term growth. That, in my opinion, is an incorrect approach because shareholders' fund is actually one of the most expensive sources of capital invested in your business. Reason being very simple, because when a banker lends to you and your company, they take also some kind of collateral or security for lending that amount to you. So the asset that they take as collateral maybe has a value of 100, but the banker will keep some margin money of 25% and give you only 75% against that asset of 100, because they know the asset may depreciate over time, and the value that you see in the balance sheet may not really be the actual value if the business has to dispose of that asset and realize that money. For the simple reason, you'll realize that if your banker is lending to you at a rate of 10%, and you, as the owner, as the promoter, as the entrepreneur who's invested his own money into the business, you have not taken any collateral against it, because if you lose money, you have the risk of losing all the assets in your company, which could also be a private limited, which essentially means that if you owe that much amount to outsiders, you get sued, you lose everything. Also, the banker is only a passive investor, not engaged in running the business on an everyday basis. However, you as the entrepreneur put in the effort, put in your toil, put in your sweat to run that business and make it profitable. For that simple reason, a good thumb rule to see is that if your cost of debt is 10%, your cost of capital of shareholders' funds is at least twice that cost. So when you calculate your weighted average cost of capital, please take that into consideration, do a calculation, and see if your business is actually generating returns over the weighted average cost of capital. Do that exercise with your CA. Great insight for your business.